guys, welcome to the Silver Report. Here we are, it's Wednesday, February 15th, 2017. We have gold currently trading at $1,228.10. Silver is trading at $18.01. And let's get into some of the economic factors that will be playing a part into the price of precious metals. So what we're seeing is that Italy might be the real canary in the coal mine when it comes to the breakup of the EU. It is one of the economic powerhouses within the European Union, one of the largest economies. And what we're seeing is that the odds of Italy leaving the European Union are on the rise. Many people are looking to France right now as one of the sources that will be the concern. We already know Greece, they have 1 foot out of the door, and they're looking to France as being an issue. But there's also the Netherlands, but more specifically Italy. The EU might develop into a political mess that can impact world markets in a dangerous way. Now, the European Union was founded on the idea that those who trade together don't engage in war with each other. So the sweeping treaty included 30 countries of varying wealth, and it notes that the odds now, and what else could come from this besides just an economic breakdown, is that war, the ending of these treaties. And so they're predicting Greece leaving the EU at 2-to-1 odds, with Italy not far behind at 9-to-4 odds. France, the much discussed next major populist battleground, has 7-to-2 odds, and the Netherlands, where the Union was conceived, is now 7-to-1 odds of getting a divorce. And so what we're seeing is the possible canary in the EU coal mine. Don't just consider France as a potential breakup point in the Eurozone of wildly divergent debt-to-GDP ratios among all of their nations. Last week's widening EU bond yields coming along with the correlated rise in the price of gold, breaking recent trend correlation. This change in correlation pattern signals the market is looking at the problem very differently. The Greek problems are once again front and center as other political issues. At the core of the problem is with one of the region's largest economies, Italy. The populist five-star movement is almost the most popular party in Italy. The startling advancement could mean that if they are included in the government, an EU referendum would likely be the next action on their political agenda. And so what we're seeing is the collapse of the Eurozone, the collapse of the European Union taking place right now. And so this really plays in because it's something that's spread across all developed nations right now. This generation, between 2005 and 2014, the real income of up to 70% of households in advanced economies has flattened or fell. So not only within the United States, but also the countries within the European Union. And so if you grew up in a developed country after World War II, you were likely to be better off than your parents and your grandparents. For much of the past 70 years, nearly all households in advanced economies have seen their incomes increase, thanks to mostly steady economic employment growth. Between 1993 and 2005, 98% of households in 25 advanced economies experienced rising incomes. In recent years, though, this trend has ground to a halt. It's even gone into reverse. They found between 2005 and 2014, the real income for up to 70% of households in advanced economies flattened or fell. Many governments have attempted to soften the blow with lower tax rates, transfers. However, up to a quarter of all households in these countries still saw stagnation, falling disposable incomes during that period. When we look over here at the United States, we see that 81% of households have flat or falling incomes between 2005 and 2014. Italy is almost at the top of that list. Well, they are at the top of that list. What we see in Italy is that we saw their market income decrease by 97%. It had falling income between 2005 and 2014. We saw that 100% of disposable income, we saw that there was either stagnant growth or falling income. France the Netherlands, all of these countries, the United Kingdom. So they have reasons why this is so necessary for them, is because they're suffering. Italy has been particularly hit hard. 90% of households saw flat, falling incomes between 2005 and 2014. After accounting for taxes and benefits, this figure, it's 100% of the households in Italy have suffered. 80% of the households in the United States saw no growth in real income during this period. That said, as a result of tax cuts and benefits, nearly all families experienced an increase in disposable income. So this gives us a new perspective into what is going on and what exactly took place during the 2008 financial crisis. And what is causing this change, because they tell us how that we're in this massive recovery, how there's so much to be enthusiastic about. In fact, consumer confidence is so high right now. But we see that the incomes, the spendable incomes within these households in the developed nations of the world, other long-term factors such as aging populations, shifts in the labor markets, they've been contributing to this phenomenon. And they will continue to do so, because there's a very serious issue that is taking place as we see the baby boomers, when they're peak spending and they're getting to the limits, to the end of their peak spending years, we begin to see less of their money circulating. They, of course, being one of the generations that had more money than the previous generation. But the one that is just taking place, they are poorer. They have less money to spend. So we're going to see a total economic slowdown, not an increase of the economy, because the issue is that there's no one to spend the money. There's also less traveling that is taking place. Among millennials, there's less moving. There's more friction for the economy. Most people, they're staying in one location. And so the major way that this is going to be affecting is because a lot of people are staying in the homes they're in. They're not buying new homes. They're not buying more expensive homes. In fact, there's less starter homes on the market because of this. So I'm not really sure how we can see so much optimism that they're expressing about this economy. It's a major issue. In fact, the figures suggest when it comes to moving, millennials, they're stuck in the mud. Americans from 25 to 30 years to 35, it says 20% moved within the past year. Compare this to 26% of the same age group composed of Generation X in 2000, 27%. They made it the late boomers in 1990. And so these figures, why they matter. Mobility is important to the economy. People who move spend money. They spend money on houses, furniture, real estate agents, moving companies. People moving to pursue a job are often seen as a sign of a healthy economy. And so we're seeing this younger generation not only poorer, but not having money to be able to move. So there's less movement within cash. And so we see that this is a signs of a major, not only recession, but a depression, an economic slowdown that is taking place as a result of all of these factors coming into play. And just what happened in 2008, I don't know where they got this idea that we've had some kind of a recovery. I don't know where they got this idea. The fact is, from fear of bank runs, they just paint this picture and tell the American people that we're in the midst of this great recovery. And more than that, their guy Obama, they had him in the office. They got to go and cheerlead for him. Great game, even when you lose. Even when you lose. And that's the issue that we have here. Instead of monetary policy that is honest and upfront, instead of money that is real money, like hard assets like gold and silver, we have lies and paper, and that seems to be all they ever give us. But all signs are pointing to the fact that the economy is in decline right now. More than that, we have the breakup of the European Union. We already see the euro currency suffering a decline right now. we are in for some very tense times in the stock market coming up. The fact that the stock market in the United States is oversold makes it even more dangerous. These sellers are poised to move, and when this begins to take place, when the markets begin to shudder, what we're going to see is massive moves in the price of silver and of gold. Real money and typical stores, safe havens for wealth that is in dangerous assets, in particular, one of the largest currencies in the world, the euro. All right, thank you guys for joining me here on the Silver Report. If you like the content, be sure to subscribe. There'll be more videos just like this. Like the videos, share the videos. It's you guys that make this happen. And as always, stay safe.